So let's bring on Brent Schutte, Chief Investment Strategist at Northwestern Mutual Wealth Management Company. Brent, so I want to start with what we're seeing in the markets right now. As I mentioned, the Nasdaq is the leader, up about 0.75 of a percentage point. And I feel like I'm seeing more and more headlines around the Nasdaq being poised for a crash, which is a little bit of a repeat from what we saw over the summer because of the divergence between the Nasdaq and the Dow. I'm wondering how you're perceiving it, if you think that the Nasdaq is, as some of those headlines say, poised for a crash.
I'm not for sure it's poised for a crash, but it's poised for a pause. And other parts of the market that were left behind for the prior 2 years are poised to continue doing better. And so by that, I mean the things we've talked about on the show before, which are small caps, which are economically sensitive. They certainly have a growing earnings backdrop behind them. They have negative real rates, a Fed that is helping to propel them forward, and they're cheaper. And so if you think about the prior couple years, we had a trade war first, and then we had COVID that left the Nasdaq or tech stocks as the only earnings game in town. They were unimpacted while cyclical parts of the US economy and global economy did very poorly, which translated into cyclical parts of the market doing poorly. Those two things are connected. Now you're seeing a cyclical upturn in the US economy. You'll see one in the global economy as COVID cases decline on the back of vaccinations. And that to us means that investors are going to continue looking for things like small cap value stocks, things that are more cyclical in nature over tech stocks, which certainly have been kind of had a tailwind for the past couple of years. We just think that's kind of now a headwind for them.
You mentioned the trade war, and I almost felt like I fell through the looking glass. I almost can't even believe how recently we were talking about the trade war almost every single day. So looking at the tech sector, I know you're saying that it's going to be held under pressure throughout the year. Are there any segments of the tech sector, however, that do remain attractive?
Well, I think my attractiveness versus unattractiveness is a 12 to 18 month call. Certainly, there are cyclical aspects or secular aspects of the US economy that are pushing us more towards technology. And I think they'll continue to do well from an economic perspective, from an earnings perspective, but investors are going to be attracted to other parts of the economy that are growing faster off a lower earnings base. And that's more of a financials and industrials, materials, things that do better when the broad US economy does better. Will do better in 2021, possibly even into 2022. And then perhaps the tech sector can pick back up where it left off, which is rising higher.
Now, looking ahead, we've been talking quite a bit lately about inflation, and a new survey from Bank of America has been showing that investors are mostly concerned about that. Are you advocating for calm on that score when it comes to inflation, or do you perceive that as one of the biggest risks as well to the markets of going out ahead?
Sure. I think that is the biggest risk to the market. And I don't think it's a 2021 risk, though. I think it's more of a 2022, 2023 thing. So inflation to me is not dead. It will come back. I think you will get temporary inflation in 2022 or 2021. It's showing up in a lot of the surveys already. It'll start filtering through the CPI and the PCE data. But the one thing that's important is the Fed's going to ignore it. And so they are not going to pivot tomorrow. They are not going to become more tight. They're going to ignore it because they're focused on the employment mandate. Right now, there are still 9 million less people employed than before COVID. And there are about 5 million people who actually dropped out of the labor force or stopped looking for jobs. Until those people come back in, the Fed will ignore any sort of inflation blip in 2021. The bigger question is inflation more permanent this time? And I think that becomes a 2022 thing. And that's something that I think we're worried about a bit. And that would be something that could disrupt the market. I know I get questions all the time about variants and COVID cases coming back, but I think the Federal Reserve and policymakers have the downside covered. They will do more if they need to, if there is an economic slowdown. What would possibly cause them to pivot would be rising inflation that is more permanent, but again, not something that I worry about until 2022.
And there you have it, guys, the most succinct 90-second FOMC preview that I challenge you to find anywhere else. Brent Schutte, Chief Investment Strategist at Northwestern Mutual Wealth Management Company. Thanks, as always, for joining us today.